Aloha Tuesday, my friends. Welcome back to a little bit of paper trading, brought to you by this website right here, ihavsuccess.com. We're paper trading, selling cash secured put options on stocks that theoretically we wouldn't mind owning. I'm doing this because I believe if you have an internet connection, a bank account, and you spend money at least once a year, you actually have no legitimate reason not to be doing this. You don't have to spend a lot of time doing it, without spending a lot of time in front of a computer, so you can be doing other things. It will help you achieve your financial goals. We got free stuff to help you learn. Use this playlist in conjunction with the downloads. There's paid stuff. It's not cheap. If you're cheap, then I don't want to interact with you. I have to interact with enough cheap people, just on a day-to-day basis. So, yeah, I don't want to have to work one-on-one with a cheapskate. But what I am going to do is at the 1 minute-ish, 10 sec. Well, how about 1 minute and 15 seconds? We'll put it right there. Get ready? Boom! It's popping up. There it is. Boom! It just popped up. 1 minute and 15 seconds. Let me write that down. 1 minute and 15 seconds. I'm going to leave a video, link to a video for you. It gives you 5 reasons why you should be selling cash secured put options. And if that wasn't enough, just because I like over giving the value when I'm giving away things for free, at the 1 minute and 45 second mark, which is coming up right about, get ready. Boom! There it is. Another one, another link. Another link bites the dust. That second link was for the unfair advantage of selling cash secured put options. Now I'll tell you the downside. Downside number 1, this is the tortoise strategy. You ain't getting rich quick doing this. Downside number 2, it's capital intensive. So if you're a whiner, you're a complainer, like Mr. Blank Blank Blank, that guy, I told him to kick rocks. I don't need complainers in my life. I got to deal with enough, complainers, whatever. This YouTube stuff, this is for fun. If I make some money out of it, good. But I get to be picky and choosy on who I interact with. So I will. Anyways, that's what I got for you. Let's get in. Let's just dive right in here. So yesterday we put some orders into the market. Still trying to get filled on these XLF put options. And for this little series that I'm doing, these are not particularly stocks that I would want to own. So it's not financial advice. You should not follow these unless you're just paper trading. You can follow along, but you should not be using this stuff with your real money, because this is just for training purposes. So we got 12 different sector ETFs here. And we're just going to kind of play with them and get used to selling cash secured put options and what we would do if we got assigned. And through the process, we'll be looking at things like volume and, a variety of little things, how we can use delta. Sometimes we'll be dealing with like the Kona probability here and things like that, just things that I actually use on a day-to-day basis. And you can take them for what they're worth. You can discard them. I really don't give two rats tails what you do with it, my friend. And as like I said, as long as you're not a cheapskate, a whiner, and a complainer, we can be friends. And you don't have to, you ain't gotta do crap. So that's what's going on over here, right? Not financial advice, but you can take this and have yourself a good learning experience and maybe learn how to do a little bit of stuff on your own. So we got trying to get filled on XLF. XLF has just been moving up. And granted, we're looking at these 12 little charts here. Each one is showing 1 month of trading, and each candle is 1 day. And this beautiful red line there is a 200-day moving average. And we got some volume down here. You see that average volume 50? This line right there, that's instead of the price, average 200 days of the price. This is the average 50 days of the volume. So what are we seeing down here under XLE? We're seeing that it's been really low volume. All right, it's kind of going sideways here above the 200-day moving average. XLF volume is kind of, picking up just a little bit less volume today. Looks like maybe are we running out of some steam? I don't know. Getting close to that 200-day moving average and hit a monthly high right here. And let's look over at over here XLF trying to sell the 32.50 put and trying to sell the 30 put. Now this one's going to expire in 3 days. This one's a little over 30 days. Trying to get filled at 2 different price points just to see what would happen. We see the mark. This is the price we're trying to get filled at, 20 cents. Now remember, it's times 100, right? Right here, you see 100. One option contract in the stock market, at least in American stock market. I don't know about those other countries, but American stock market, one option contract is dealing with 100 shares of stock. So when it says 15 cents, you multiply that by 100. If you are not very good with math, get yourself a handy dandy calculator. And the reason why I recommend a calculator is because you probably don't have 100 fingers and toes, even if you use all 4 of your limbs. Now you might say, hey, I'm this I got some different stuff going on here. I got some extra fingers and toes. And hey, if you do, but I just never met anyone like that. So, do what's best for you. You want to use your fingers and toes, you got more than 100. You want to use a calculator, you want to use paper and pen, you want to use stones, I don't care. You can use a abacus if you want. It doesn't really matter. The thing that matters is you just want your calculations to be accurate, and you want to realize that there's 100 shares per one option contract. So because we got 30 days here, and right now it for this $30 put with about 31 days left on it, it's trying to get filled at 20 cents and 15 cents. And the mark over here is at 7 cents. But when we look at this, maybe it could fall down. Maybe if the price goes down a little bit, the premium that we can get for that option contract would increase. If the market just becomes more volatile, if volatility goes up, the amount of premium we could get for that option would increase. Now, if the volatility goes down and the stock goes down, then possibly, maybe it would remain neutral. There's a lot of different factors. So sometimes for your good buddy Brent, sometimes I'll put an order in to sell a put option at a strike price that I want to get filled at a particular price. I'd be happy to make that commitment to the market. And if you don't know what commitment is, the commitment to buy 100 shares of underlying stock at that predetermined price, that strike price. And I'll just let it sit there, right? With this one, we're running out of time because I only got 3 days left. With this one, I got some time. So I might just let this sit there. All right, this one will run out of time here. This is the mark was 3 cents, ended the day with 3 cents. We're trying to get filled at 20 and try to get filled at 8. So apparently that did not happen because we didn't get filled. We did get filled on this XLE, on the energy. Only 3 days left. Got filled for 24 cents, which again times 100, 24 bucks before commissions, before tax. And right now we could close this out for about 9 cents, maybe 10 cents. So we're profitable about 15 bucks. Now, at that 1 minute and 45 second mark, I put a link to a video that gives you the unfair advantage of selling cash secured put options. And one of the unfair advantages is if we're profitable right now, if we're not profitable, it doesn't matter, because in 3 days, I'm either going to buy 100 shares of XLE at $84 a share, or I'm not. Either way, I keep this 24 bucks. If this expires worthless, and I do not buy 100 shares of XLE at 84 bucks, I keep this $24. If this does not expire worthless, and I buy 100 shares of XLE at $84, I keep this 24 bucks. And I get this asset. And then from there, I'm going to sell a covered call option. If we get assigned, then we'll do then I will do that. And now what I am going to do though, is I'm going to right click on this. I'm going to go down here to move. And since this was filled, I'm going to move this over to long stock. Now, why am I moving it over to long stock? Because even though technically this is an option trade, it's an option trade that I'm not going to, my maintenance of this, my management of this is going to be really, really low. Because again, I don't care what happens upon expiration date. I'm happy with either outcome. There's only 2 outcomes that could happen, and I just explained them. It either expires worthless or it doesn't. Either way, I keep that 24 bucks. It expires worthless, I keep my 8,400 bucks. It does not expire worthless, I keep the 24 and I exchange $8,400 for 100 shares of XLE. And then from there, I start selling covered call options. Maybe I sell it for a strike price of 85, 85.50, 86. We'll see. We'll see, how it goes. But I'm probably gonna sell it for a minimum of 85. Under some certain cases, maybe I'll sell for 84 if the stock's dropping, pretty low. But if you don't have a lot of, technical analysis reading, chart reading, just sell it for over 85. But until we get filled, until we get assigned, then we're going to go over that. That's why you should pay attention to what's going on. Now, I got this set up a little bit different here, right? See, I see how this, lots of space here. This one's a little, less space. We got more stuff here. And look at this, probability of in the money, right? ITM, in the money. So what this is telling me is there's about a little bit less than 10% chance that this is going to expire in the money, right? No big deal. Volatility is about 1.26. I started putting volatility on here, but for the last 7 or 8 years, I've been doing this and I never paid attention to volatility really, other than implied volatility, looking for a good time to sell it. But I just started adding it on here to further educate myself. Theta, right? Now this doesn't have a lot of time to it, right? And this is showing us that we're basically, if all things remain equal, this contract is losing a little less than $6 of value a day due to time decay. I got a video somewhere on here that I made this real pretty little cartoon showing a ice cube going down a conveyor belt, moving towards a heating source, and as the ice cube gets closer and closer to the heat, it starts melting at a faster and faster rate. And that's what happens with these insurance products. Just like your car insurance, if you pay month to month, as you get closer to the end of the month, when there's only 3 days left of the month and you haven't been in a car wreck yet, your insurance doesn't have much, starting to lose value pretty quickly. But of course, the average person's not going to go out and crash your car just to cash in, right? Oh, I only got a little bit of time left. Delta, in what we're doing here, we're kind of interacting with Delta is the same as probability of in the money, right? This one is probably more accurate, but this still, it's pretty accurate. You see, this is about a little less than 10% chance. Technically, what delta is that for every dollar the underlying moves, your option gains or loses the delta, right? So if it moves against you, your position is going to be losing value. If it moves in the direction you need it to go, it's going to be gaining value. So that's what we got right now. What should we do over here? What do you guys want to do? Oh, shucks. Unfortunately, I can't hear you. Can you speak up a little bit? We're going to leave this one open. And what I'm going to do over here, I'm going to cancel. Oh, try to cancel that. I'm going to cancel this order. I'm going to cancel this order. We're going to get out of the 3 days. Do you totally want to get out of the 3 days to expiration game? We got XLE. Let's move that over to XLF. All right, 3 days of expiration. Look at this. This is we got a lot of liquidity though. A lot of people trading this. I guess just for number twos and laughs, we could potentially sell something right here, right there, close to the money. So if we did that, then based on the delta, we'd have about a 25% chance that we're going to be taking ownership of XLF at $33. Now, if this was my real money, I'm probably not doing that. You know why? Because right now, just like what I'm seeing, look we're getting close to this 200-day moving average. We got the 50-day moving average sloping down. Potentially getting ready for the death cross. And even though we're above this 9-day moving average, and is this a 9-day? Forgot what my colors are. 9-day and the 20-day, they're starting to move up pretty well. But we've been on a pretty good run here for 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 trading days, right? Because this one was kind of a pullback, but 9 trading days it's been going up. So I wouldn't be surprised if we had a little bit of a pullback. How much of a pullback? Let's see. Look over, when I put my cursor on this candle right here, look at this, at that right there. The L is for low, right? That's where I'm looking. Look there with me. Low of 32.72. So I wouldn't be surprised if by the end of the week it's retesting down in here. Now I also wouldn't be surprised if by the end of the week it's testing up here. Either way, right? My crystal ball is not giving me that information. Now, my crystal ball is definitely giving me information, just happens not to be on this. And so with my real money account, what I would probably do, here's some other things. It depends, how badly do I want to own XLF, right? That's one of the big things. If I think that 33 is a great value, like this is, let's say I think anything under 35 is a purchase price, 35 and lower, then yeah, I'll sell that. I'll sell that 33. I'd be happy, right? If I can get, if I think the fair value is 35 and I could buy it for a $2 discount, of course, I'll sell that 33 and potentially take in maybe 10 bucks or whatever it is, right? And only have a 3-day insurance policy. Now, let's say if you're like, well, 10 bucks, that's not a whole lot of money. I want to make a little more money. Then maybe you look at selling something longer. Here's 38 days. You can make 50, 60. The highest it traded up today was a little bit under 70 bucks at that same strike price. Your commitment to this process is longer. It's a little less than 40 days. And you have a little over 40% chance of it of taking ownership of it. But if you want to take ownership of it, what does it matter? So right there's different factors. And also what I like to look at is what's the overall market doing. So let's take a look at what is the overall market doing. Here's our, there we go. I was lost in the sauce for a second there. Just hope not that type of sauce. I don't drink. I'm a soberado over here. But what's the market kind of doing? All right, we see kind of going sideways, going up and sideways. Over here, let's take a quick peek at. Do we got? Where did I have it on here? Oh, general market. That's what I'm looking for. All right, so we got here's our 4 main indices down here, right? All right, so S&P 500 still moving up. Is it running out of steam? Debatable, right? We see it wasn't running out of steam right in here. Could be, maybe not. We'll see. Over here in the Dow Jones, kind of looks like it's topping out a little bit there. It is definitely pushing towards the top of that range, so it could push higher. NASDAQ, we see is out of this candle right here. So let's say this range through here, we're more in the middle. We're not pushing towards the top, where this one we're pushing towards the top of the range, above that 200-day, above the 200-day, above the 200-day, 200-day starting to move up, 200-day starting to move up, 200-day starting to move up, 200-day below it, and kind of moving sideways with a lot of volatility in there. And we see, wow, look at this on our VIX, which I don't know if it's an accurate representation of fear in the market anymore. It used to be called the fear index. It's still probably called the fear index, but I don't know, with all these 0 DTE options, I'm not sure how accurately this measures it anymore. But based on the VIX, there's not a lot of fear, if that's still a good indicator. Dollar moving down overall, but it's volatilely moving down at the moment. 20-year treasuries at the bottom of this range, right? From here was a pivot up to here, and we're back down to there. So what is that telling us? Gold kind of moving sideways, but still staying above $2,000 an ounce, and oil moving sideways above 80. You could see about a month ago it was down here at this low. Now we're up there. So what's the market doing? Well, your good buddy Brent, even before the end of last year, I was thinking, wouldn't be doubting if we're going to see some sideways movement. So yeah, normally this is for the 3 days. This is, we could maybe get some money right here. That's a big look at this though, from about a 25% chance of being assigned to about a 10% chance of being assigned. And let's I don't know. I don't feel good about selling that right there. So let's sell this one. And I know I'm probably not going to make a lot of money. Let's just try to sell it for let's see if we can get filled for 4 cents tomorrow, right? Whatever. And move this over. I like to put these in open orders, and you saw at the beginning of this video, I got these broken down into different things, and put everything under open order. If I get filled, then I'll move it into the right category. That's how I like to do it. It just kind of keeps things organized for me. Well, we'll finish this video off with talking about these are option trades right here. Well, technically, this is an option trade, right? This is not long stock at the moment. I get it. Well, the reason why I'm putting it here is because it could result into long stock, and I'm okay with it. Now, if this was a naked put option, then I would have that under option trades for me. But what we're talking about is selling cash secured put options. Again, one of the biggest advantages of selling cash secured put options is that upon expiration, it just doesn't matter what happens, because you have the money to fulfill your obligation. When you're selling naked options, you don't have the money to fulfill your obligations. So what kind of person you want to be? I know trading's a little bit different, you know, but if like, you know, for example, I live in a Hawaiian Standard Time zone. I work a lot, right? I love trading. Right? I've been trading for kind of a while now, and I love it. I'll always do it. But making YouTube videos and trading is not the bulk of my income. In fact, and so I tend to do things outside of the stock market that put a high demand on my mind and my time. And so I love this, even though I'll do other things. This is not the only type of trading I do, but no matter what's going on in my life, I always do this. Depending on what's going on in my life, I may or may not do other type of trades. I just got back from Florida. In my real trading account, since I knew I was going to Florida about 2 weeks before I went, I made sure my account was positioned where I would be okay, kind of regardless of what happened while I was in Florida. I didn't want to be at this conference and be stressing over some sort of stock or options position that could potentially lose me money. I wanted my mind to be fully focused on the task at hand of going through this convention. So that's what I did. So if you want your mind to be fully focused on paying attention to your kids while you're at their soccer game or whatever game, recital, whatever you do with your kids, then consider doing this. Okay, my friends, in a half hour, I'm getting on a Zoom call. I am re-auditing the beginners, the fundamentals of options trading with Hawaii, Honolulu option trading group, and so I'm in the process of re-auditing that. I think we got 10 more weeks left, something like that. And it's always good to be brushing up on the fundamentals. Like my jiu-jitsu instructor used to tell me, even black belts win competitions with arm bars. You guys have a fantastic day, and reach out to me if you want to become buddy-buddy.